What's going on, guys? This is Foresight Capital, and today we're going to talk about Palantir's lockup period and how it could ultimately affect the stock price, whether or not you should worry about a big correction happening, and everything to do with the lockup. We've been covering Palantir pretty thoroughly over the past week or so, but more so on the technical side of things, and given that Palantir is a relatively recently traded company, a lot of the price action has been happening solely as a result of technicals because there just isn't a whole lot of fundamental data out there for investors to make their decisions based off of. Now, Palantir has been a company for 17 years, but they've only been publicly traded for 2 months, and we've only really had one earnings report, as we can see here on the chart. That was back at the beginning of November, and ever since then, we've had a pretty big technical run-up and a little bit of a sell-off, but today we're going to talk about the lockup period that happened as a result of their recent IPO and how that could affect the stock price. One of the best articles that I've found out there on the Palantir lockup period is actually on LinkedIn, which you typically don't find a ton of great data on LinkedIn, but this is a very thorough article, so I'll actually link it in the description below. But basically, Palantir did what's called a direct public offering, which is different from an IPO in that there weren't as many underwriters involved in determining the overall stock price when the company went public. Instead, they offered shares directly from people within the company, insiders, executives, and other people who had stock options within the company, and sold them directly to the public as opposed to going through the JP Morgans, the Goldman Sachs of the world, who do the underwriting and ultimately determine the value of the company. As a result, Palantir actually IPO'd at a much lower price than they would have IPO'd at if they would have had a standard IPO where underwriters got the opportunity to kind of bid up the price. And Palantir, in theory, could have raised more money going that route, but they elected to go the direct public offering route. When they went this particular route, they were only allowed to sell 20% of their overall shares. So currently it's estimated that there are about 500 million shares of Palantir currently traded, which means there's about 1.7 billion shares that could hit the market when the lockup ends. Basically, the lockup just keeps insiders from eventually or selling their shares right away once they get a big spike in price. So the initial lockup period was to be 180 days at least after the IPO. And it's now been determined that the IPO or that the lockup period will end 3 days after the December 31st quarter report. So that's expected to be sometime in January or February. And then 3 trading days will have to pass after that report to allow the market to digest whatever sort of data actually comes up in that report. And on the 3rd day, we'll basically have all of the insiders from Palantir, which is the executives, the people who have been with the company for a while, and even people who no longer work there who still have some stock options, be able to actually sell their shares. There's a big fear in the market that when this happens, just given the big run-up of Palantir since its direct public offering, that the price could really sell off over the coming trading days after the lockup period ends, because there's going to be a flood of people who are looking to take their profits. So there are a lot of different scenarios to take into account there. The biggest thing that's important to know about Palantir is that because they had been a company for 17 years prior to actually doing their direct public offering, there was a secondary market already for these Palantir shares. Meaning that if people wanted to actually sell their shares prior to the direct public offering, they absolutely could, and there was really no restrictions in place against that. So it's not like these people have been holding their shares from a zero-cost basis for the entirety of the existence of the company for 17 years. They've had the ability to buy and sell shares in a secondary market all along. So these people that will be looking to sell shares, of course, they'll be looking to capitalize on the potential capital gains that they have from the shares that they're holding, but it's not like they've never been able to sell them. There's always kind of been a secondary market for these shares, unlike some younger companies that basically start operations and then look to IPO as immediately as possible, and they may or may not have ever sold any of their outstanding shares before. Palantir has been around for a while, so there's always kind of been that potential. So the LinkedIn article talks about a few different scenarios that could happen, and the first of which is that Palantir skyrockets after the direct public offering, and insiders may want to sell a portion of their shares to capture the profit. So if we hop back over to the chart here, we can see that since the direct public offering, and we'll zoom this out to a 1-year chart, we can see that they've gone from anywhere of about $8.90 per share all the way up to $33.50. And currently, the technicals would indicate that we're going to continue to see an increase in price. This wedge area here that we're running into, and if you want to learn a little bit more about that, watch my previous video. I'll link it in the cards throughout the video. If the price continues its general uptrend, there will probably be some people who want to take their large profits and cash in on that, because at this point, the stock has more than tripled since their direct public offering, and in some cases gone up almost 300%. The next scenario is that insiders might kind of want to hold on to their shares because they think that the price could go higher. This is where the couple of days prior to the lockup are going to be very important. If institutional buyers or people that have bought the stock previously start to sell a lot of their shares, that could compress the price, and that could indicate to us that the insiders may be leaning more towards selling their shares and taking their profits, and thus the stock price could go down. However, if the price in the coming days before the lockup continues to go up, that could actually tell us that maybe the insiders will ultimately want to hold on to their shares and ride a bit more of that appreciation in price. So this is largely going to be driven by the institutions, which is kind of a little weird to think of, because what we're worried about here is that the insiders and the people within the company are going to either sell their shares or they're not, depending on whether or not they think they're going to continue to go up or whether they could decline. And the institutions will probably ultimately determine which way that's going to happen, because if it looks as if the stock price is going to keep appreciating, you'll of course have some people who want to take their profits and kind of take some of the risk off of the table of the stock going down, but you'll have the other people who want to continue to ride the wave of the stock appreciating. And then it goes on to talk about basically if Palantir has fallen since the direct public offering, insiders might want to wait, and that could cause the price to appreciate. Keep in mind, though, that we direct public offered somewhere in the $8 to $9.50 per share range, so it's very unlikely that we're going to be trading in that range by the time we get there. And then the other scenario that the article highlights is that if Palantir has fallen since the direct public offering, they may want to cut their losses. Again, probably not going to be relevant at the time of the lockup period, because again, that's going to be in January to February, and it seems that based on the overall trend of the stock so far, that we might see some price appreciation through that time, potentially testing all-time highs in the coming couple of days. And even if we do see a pullback, it would be very unlikely to fall to the $9.50 per share range, where people would ultimately be running into the potential of losses. And then the article goes on to talk about where people potentially bought into Palantir and how that could affect their overall decision on whether or not they want to buy or sell Palantir as insiders. So not all of them have the same cost basis on their shares. Some will have higher cost bases, some will have lower. And obviously some of the executive and senior level directors will have more shares to sell. So there's going to be different levels of buying and selling. If all of the lower mid-tier management wants to sell, there probably won't be as many shares hitting the market, whereas if you have some of the top executives looking to kind of take their profits and dump shares onto the market, we could see some price depreciation. So there's a lot of things in factor here, but the big concern is that the price could drop by as much as 20 to 30%, as it does sometimes when tech stocks actually go and end their lockup period. So some recent ones that come to mind are companies like Uber and other companies that had very large IPOs. They had a lockup period, and then when the lockup period happened or ended, the executives took a lot of their profits. Snapchat is another one that comes to mind. And the price declined somewhere in the 10 to 20% range for these stocks. And that's kind of the fear that will happen with Palantir. So what we want to watch for over the next couple of months is just how the price reacts. And after they announce their fourth quarter earnings, which is the quarter ended December 31st, which will happen sometime in January or February 2021, we'll have a 3-day trading period to kind of see which way the stock is trading based on those earnings. And then that'll give us a good idea for which way the stock lockup is ultimately going to go. Because the stock could definitely rally higher if nobody sells their shares and everybody wants to hang on and kind of continue earning profit. So I think that's all to say that there's not a whole lot to worry about and not a whole lot of analysis we can do at this time on the stock lockup occurring, because it's largely going to be driven by what happens the couple of days before the lockup ends to determine how big of a sell-off could happen or whether one will happen at all or not. So that's something I plan to do an update video on, since we have a good little series going on Palantir here now, and it will be interesting to keep kind of following up with this as the weeks and months progress. I really hope that this video brought you some value, and remember to check out the article. There's a lot of great information in here. I'll link it in the comment or in the descriptions below. Leave a comment. Do you think that the lockup is going to have a big impact on the price of Palantir, or is it just kind of retail investors getting worried about the potential for some losses? Thanks for stopping by. Don't forget to subscribe if the video brought you value, because we're going to keep following up on Palantir, and catch you in the next one.